morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Finance Secretary Reto backs off a proposed tax hike on capital gains, donations, and estates, citing stronger revenue collections. Special Assistant Frederick Go and Trade Chief Cristina Roque head over to Washington, seeking lower tariffs on Philippine exports and stronger trade ties with the United States. China takes a tough stand in the tariff dispute, sending a clear message to U.S. President Donald Trump that we will not bow to pressure. Global stocks end the day mostly higher as investors digest earnings, economic data, and the latest moves in U.S. trade policy. U.S. markets finished Tuesday in positive territory after a choppy session, with investors weighing corporate earnings and trade developments involving Japan and India.
The market today has been whipping around a little bit. It initially wanted to open lower, but after Scott Bessent's comments, it seemed to get a little bit better. So I think the market tends to react well to Bessent for some reason. I think they trust him more than maybe some other people in the administration. And then following along with, we are still in earnings season. Some companies actually did pretty good, which is great. Others cannot give commentary on guidance, which is also interesting. But so far, so good for today.
The Dow Jones Industrial Average rose 0.8%. The S&P 500 edged up by 0.6%, and the tech-heavy Nasdaq gained 0.6%. European markets closed mixed. The UK's FTSE 100 added about 0.5%. Germany's DAX climbed 0.7%, while France's CAC 40 slipped 0.2%. Finance Secretary Reto backs off from a proposal to raise capital gains, donors, and estate taxes, saying higher than expected revenues in the first quarter have given the government fiscal breathing room. Reto clarifies that the administration is not pursuing new taxes or additional burdens for Filipinos, citing a robust fiscal position and strong collections so far this year. Instead, the Department of Finance will focus on boosting non-tax revenues to hit collection targets and to maintain public services without raising tax pressure on households and businesses. Global credit watcher Fitch Ratings affirmed its BBB credit rating for the Philippines, indicating that the country remains in investment-grade territory. A BBB rating signals low risk of default and reflects the government's adequate capacity to meet debt obligations. Fitch also kept the country's outlook at stable, suggesting that the rating is unlikely to change over the next 18 to 24 months. In its review, Fitch cites the Philippines' strong medium-term growth outlook, which could support a gradual decline in debt to GDP ratios. It also notes the relatively large size of the economy compared to peers in the same credit band. Special Assistant to the President for Investments Frederick Go and Trade Secretary Cristina Roque are headed to Washington as the Philippines seeks better trade terms with the United States. The delegation will push for lower tariffs on Philippine exports and look to strengthen economic ties with the U.S. amid heightened global trade uncertainty. The meetings are set with officials from the Office of the U.S. Trade Representative and the Department of Commerce. The Philippines is also open to boosting imports of select U.S. agricultural products, but officials say any trade-offs will be balanced against the interests of the local farming sector. Now, Asia faces growing pressure from the global trade war, and the region's export-driven economies must adapt fast. Asian Development Bank President Masato Kanda says countries should diversify trade partners, stimulate domestic demand, and maintain sound economic policies to stay resilient. While Asian economies are stronger than before, Kanda warns that rising tariffs, particularly from the United States, continue to erode competitiveness. Vietnam, Thailand, and China have been among the most affected, with sharp increases in import costs due to U.S. trade policies. Kanda also points to heightened market volatility as a compelling reason for economies to broaden their growth strategies. The Philippines maintains a clean record on intellectual property protection, a key factor for investor confidence and trade relations. For the 12th straight year, the country stays off the U.S. government's special 301 watch list, which tracks how well nations protect intellectual property rights. The U.S. Trade Representative recognized the Philippines for creating the DTI's e-commerce bureau to combat fake goods online, and for the work of the Intellectual Property Office in public education and in strengthening judicial capacity. But the report still flags concerns over counterfeit medicines, citing the Philippines as one of the main sources of these dangerous products. Now, vacancy rates in Metro Manila's property market remain elevated, but some segments are starting to show signs of a recovery. Sujin Kim has the details.
According to the latest report from Colliers Philippines, Metro Manila has recorded a new high in vacancy rates. Nearly 20% of office spaces were left unoccupied in the first 3 months of the year. And the situation is expected to worsen, with vacancy rates forecasted to reach 22% by the end of the year. But the challenge goes beyond the office sector. In the Bay Area, more than half of residential condo units now stand vacant, a result of the POGO exit and weak demand from local buyers. To counter the slump, developers are aggressively pushing ready for occupancy promos to spur sales and absorption.
Because they really want to lift the market at this point, and they want to see significant improvement in take-up in that RFO segment.
On a positive note, Makati's Central Business District is seeing renewed optimism, driven by new zoning rules and major bank headquarter redevelopments.
We saw a 189% increase year-on-year in Makati CBD.
And BPOs are still the ones contributing positively to net take-up with their expansions.
Retail spaces are also showing signs of recovery. Metro Manila's small vacancy has dropped to 13.1%, the lowest level since 2020, fueled by major refurbishment projects from giant developers like SM and Ayala, and the entry of more brands into the country.
That foreign brands continue to expand their presence in the Philippines.
However, a new threat looms over the real estate industry. The proposed increase in capital gains tax from 6% to 10% is expected to slow down real estate transactions and further erode property affordability across the country. Sujin Kim, Bilyonaryo News Channel.
Shipping giant Maersk maintains all its trans-Pacific sailings, even as U.S. tariff policies continue to disrupt global trade flows. The company says customers shipping from China to the United States are taking mixed approaches. Some continue as normal. Others reroute to different markets, while some hold off shipments while waiting for clarity on tariffs. This comes as the Trump administration imposes a 10% base duty on most imports and a sweeping 145% tariff on goods from China. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are moving this morning. Right now, I'm seeing a mixed picture. The Nikkei 225 is higher, flat with an upward bias, up by a little under a 0.1%. Hong Kong's Hang Seng Index is in the red, lower by 0.7%. Shanghai's Composite lower by 0.2%, and Singapore's Straits Times Index is in the green, higher by 0.2%. Here at home, Philippine stocks closed flat yesterday, Tuesday, with the main gauge higher, while flat with a slight upward bias, up by less than a 0.1% to 62.52. This as investors await fresh catalysts. Now, sentiment remains cautious amid mixed earnings, economic data, and global trade uncertainty. Right now, as of 10:13 this morning, the main gauge is in the green, sharply up by about 1% to 63.10. All shares index in the green as well, higher by 0.5% to 37.07. The financials, industrial holding firms, property, and services counters are in the green, whereas the mining and oil oil is limiting the market's gains, lower by about 1%. Volume is at 53 million, while value is at 540 million pesos. We've got 68 advancers, 37 decliners, while 47 stocks remain unchanged. Now, in the currency market, the peso opened stronger at 56.01 to the greenback, up from its previous close of 56.15. In other news, President Ferdinand Marcos Jr. remains the country's most trusted government official, based on the latest survey by Okta Research. The president scored a 60% trust rating and a 59% performance rating in the April 2025 Tugon ng Masa survey. In a statement, President Marcos said that he was inspired by the results, adding that it shows that the administration is making progress. The ratings are slightly lower than in November of 2024, but Okta says that the dip is not statistically significant.
Well, it just validates that what we are doing, that people are now beginning to understand what we have been trying to do for the last 2.5, almost 3 years. So it continues to inspire me because it shows that we're making progress.
The Philippines is facing a growing shortage of healthcare workers, with thousands of nurses, doctors, and medical professionals migrating each year for higher-paying jobs overseas. This is straining local hospitals, pushing up healthcare costs, and raising concerns about the country's ability to meet rising demand. To help fill the gaps, companies like Optum Philippines, the local arm of US-based United Health Group, one of the world's largest healthcare service providers, are investing in training, career pathways, and talent retention to build a stronger workforce right here at home. Joining us now is Rain Tan. He's the Vice President for People team of Optum Philippines to talk about the talent challenges facing Philippine healthcare and what it will take to make the sector more sustainable in the years ahead. Hi, Rain. Thanks for being here with us.
Good morning, Maiki. Thanks for having me.
Okay, Rain, can you describe the current state of the Philippine healthcare workforce? How bad is the brain drain in 2025?
Yeah, I think you put it really well. No? The current environment is quite strained. According to the Department of Health, the target ratio for nurses to patient is supposed to be 1:12, and we're currently running at a ratio of 1:20. So it's almost twice that number. No? So you can imagine what that experience is going to be like for the patient, for the doctors, when there's that level of shortage.
Thin.
That's correct.
Speaking of numbers, you also mentioned 125,000. That's the current shortage.
Yeah.
How much of a strain would you say this is putting on hospitals, clinics, telehealth, and public health policy?
Yeah, so I mean, when you have that level of shortage, you can just imagine what that is like for the patient.
On the ground,
right?
Yeah,
on the ground. The amount of wait time that one has to go through in order to get seen by either a doctor, to get cared for by a nurse, is really quite substantial. No? So what we're really trying to do is we're trying to supplement a lot of that by making sure we're able to provide continuing healthcare education to a lot of qualified local healthcare clinicians in order for them to stay current in terms of their learning, in terms of their upskilling, and hopefully provide an environment where we can continue to have a healthy pool of nurses to be able to service the necessary needs of our countrymen.
Speaking of a healthy pool, you know, there are lots of stakeholders involved in this industry. There's the government, there's the private sector, and then there's the academe. From your vantage point, what are the biggest structural challenges in this space?
I can think of three very distinct challenges. No? The work environment is one. Just the amount of strain that we have on our healthcare workers, I think, is something that we really need to look into. I can't talk about health challenges without also talking about the economics of it. No? How we're able to compete with our international counterparts.
That's the biggest
in terms
lure
of
for
compensation.
going overseas.
That's the biggest draw.
It's compensation.
That's correct. That's the biggest draw when you think about what a healthcare worker thinks about when they think about migrating abroad. It's really the economics of it. No? The third component is really career progression. You know, oftentimes a healthcare worker works in a role and retires in the same role.
So
there's
career
really
growth prospects.
There's really no
Okay.
growth and lack of options for
Yeah.
them to be able to pursue more expansive careers in the current healthcare
And with that, the
space.
pay as well.
That's correct.
All right.
That's correct.
Okay, so tell us what you're doing at Optum Philippines. You're a part of the United Health Group, which is based in the U.S., based out of Minnesota, one of the world's largest. What do you guys do here in the Philippines that helps reverse that brain drain?
Yeah. So I think this is where some of the opportunities that we find in U.S. healthcare really provides us a chance to provide more robust careers for our healthcare professionals in the Philippines. So in the U.S., while healthcare is quite robust, it's also complex and fairly fragmented. And so what Optum and the United Health Group tries to do is we try to position ourselves in the most critical components of the health system. We support the entire process end to end, from billing and enrollments, from enrollments and eligibility, all the way to managing the integrity of payments for our providers. And all of those require very specialized roles in order to support that process. So a lot of our health professionals that we hire support all of these critical components. It allows them to understand the health system end to end, and it gives them visibility into a more complex system, how that operates, and be able to contribute more meaningfully in that system. It also allows them more latitude in terms of career growth, because they get to transition from one segment of that work to the other, and allows them to become better experts in that space. And then the last component is the economics. We're able to provide more competitive compensation. I think more competitive certainly than what they would get through the local healthcare system. And that allows us to be able to retain our talent much better.
Well, interesting, with automation, it allows for this remote work.
Yeah.
So it really allows for your framework to pull through so that
Correct.
we can keep the jobs right here in the Philippines. They can stay in their profession, they can grow, they can earn more, all right at home, although the hours are U.S.
Yeah, that's
right.
correct.
Okay, what are your core products at Optum, Rain?
So the product is really the service. So we don't offer the product locally, but the product is the service. And maybe to our target audience in the Philippines, to the healthcare workers that we try to attract or the care workers that we try to attract, it's the job, it's the product. So it's really all about being able to become experts in the healthcare system. It's really being able to grow their careers and experiencing more latitude in terms of their careers. It's also providing them an opportunity to have a more expansive framework in terms of what they will learn in the healthcare system.
Yeah, you're elevating the standards in this industry. Can you talk to us about the type of talent that you hire? What does it take to work at Optum Philippines?
Yeah, so we're very inclusive in terms of our talent base. Obviously, you have our clinicians. We hire our share of doctors. Predominantly also we hire nurses, we also hire pharmacists, but we also have other talent pools that we also need in order to make the health system work. We hire care professionals, someone who can talk to our providers, who learns the system so that they can support our members. We also hire IT professionals to be able to help us decrease the friction of technology for our members and also for our own employees.
It's interesting because there are so many paths to grow via Optum. If you were a nurse just here in the Philippines, you start out as a nurse, and a lot of our nurses, they end as nurses. Whereas at Optum Philippines, what are the different paths by which a nurse can grow in her profession?
Yeah,
His or her profession.
So there's multiple pathways. The more straightforward path is a pathway to leadership. So that a nurse does not just end up supporting back-end work, but they're able to scale their role by leading a team, by leading a group, by leading a division. Hopefully that goes all the way to an enterprise role where they can become the chief nursing officer of the organization. For me, that's really the dream, is to really have a Filipino healthcare leader running a significant portion of our healthcare business in the U.S. But aside from that, a nurse doesn't really just need doesn't only have a clinical career option to pursue. They can also branch out into other roles. and we're quite democratized in terms of the avenues that our talents can pursue. So if they want to understand how claims works, how payment integrity works, how billing works, they can pursue those options as well, and truly become healthcare experts and not just a clinical expert.
And at Optum, how are you working with the government, with the private sector, and with the academe to help promote and give better opportunities to the people in the healthcare sector?
Yeah. So when you think about all of the different actors in healthcare, and I think the challenges that we're trying to address now, the way I would term it is, we have a noodle soup of entanglements, that we really need to try to slowly untangle and tease out in order for us to be able to resolve some of the issues. Part of what we're doing is we're funding research in order for all of our different stakeholders to have access to the right information so that we can have dialogues around the problem. The other piece is we provide forums for all of the different actors to come together to really discuss, because we believe that the answer doesn't just lie with government. It doesn't just lie with the private sector. It really involves all of these different parties coming together to truly have a conversation to figure out what is it that we really need. We can't keep on throwing money at the problem. That's not the solution. It really needs to be a very holistic approach.
It's a multi-pronged
It's a
approach.
multifaceted approach that we need to be able to address in order for us to create the right environment for our healthcare workers to be successful.
In this industry, where now does the Philippines have a competitive advantage? And on the flip side, where also are we falling behind?
Yeah, I think talent continues to really be our edge. The capability of our healthcare professionals to learn, their technical knowledge, their capacity to work the hours, and to not be afraid of hard work. And the third component is really, I think, where our advantage becomes a bit more nuanced. It's our ability to communicate. Not just our command of the language, but also our empathy, our ability to anticipate what the patient needs, I think is quite unique. That combination, I think, is quite unique to us because we can offer it at scale, which is why
Correct.
you go to
and
any.
That's at scale.
Yeah,
right?
you can go to any hospital, any clinic in the U.S. or in any major economy in the world, and you will always find a Filipino healthcare professional there. Our ability to offer that at scale really gives us great ambassadorship in terms of healthcare. I think that's really our distinct advantage.
Yeah, we've made our mark in the world, and we will continue to do so. Okay, so Rain, where's the demand for healthcare talent growing the fastest?
What's surprising is it's not in the clinical space. It's really in the tech space. I don't think there's any industry today that's not being disrupted by
tech,
automation. By automation, by machine learning. And when you think about the shortage that we mentioned earlier in our conversation, a lot of that shortage is being addressed by automation so that we can reduce the strain by helping with clinical decision making. We can reduce the strain in terms of information management by reducing the friction that members or patients sometimes go through in order for them to access healthcare information.
And finally, last question, Rain. What's next for Optum Philippines over the next 12 to 18 months?
Yeah, so Optum continues to be very invested in the Filipino talent, whether it's the Filipino clinician, the Filipino IT professional, the Filipino care worker. We continue to be invested in our business in the Philippines. Our goal really is to make the health system work better, and I think through the talented men and women that we hire in the Philippines, we believe we'll be able to get there, and be able to contribute in a very significant way towards making that system work better for everyone.
Yeah, this is a key strength naturally, the power and the might of the Filipino healthcare worker. And thank you for giving Filipinos the opportunity to do it right here from where they live.
Thank you.
All right, thank you so much, Rain Tan.
Thank you very much, Maiki.
All right, we're taking a quick break. Business 360 will be right back. Welcome back. House Majority Leader Manuel Jose Dalipe files a cyber libel complaint against the Manila Times over what he describes as a false and malicious story on an alleged political strategy known as Oplang Horos. The article claimed that Oplan Horos involved a campaign plan for the administration-aligned Alianza para sa Bagong Pilipinas, including moves to impeach Vice President Sara Duterte and undermine her supported senatorial bets. Dalipe insists that the story is fabricated and argues that it poses a threat to the integrity of political discourse ahead of the midterm elections. On another front, the Office of the Ombudsman places Cebu Governor Gwen Garcia under preventive suspension for 6 months without pay over alleged grave abuse of authority. The suspension stems from a complaint filed by a certain Moises Garcia Diaparin, who accuses the governor of abusing her authority by issuing a special permit to Shalom Construction for a desiltation project without a compliance certificate from the Department of Environment and Natural Resources. Governor Garcia plans to appeal the Ombudsman's order, insisting that the provincial board approve the permit to address the ongoing water shortage in Cebu. Former Finance Secretary and banking industry veteran Edgardo Espirto passes away at 89, leaving behind a legacy that spans government service, diplomacy, and corporate leadership. A 1958 graduate of the University of the Philippines College of Law, Espirito held top posts in some of the country's largest banks before being appointed finance secretary under the Estrada administration in 1998. He resigned a year later and testified in the president's impeachment trial, turning a turning point in the controversy surrounding BW Resources and alleged stock manipulation. Following death threats, Espirito left for the United States, later serving as Philippine ambassador to the United Kingdom, Ireland, and Iceland. He passed away early Tuesday in Los Angeles, just weeks shy of his 90th birthday. All right, we're going to be taking a quick break. Business 360 will be right back. China says it will not kneel to U.S. pressure, issuing its strongest response yet to President Donald Trump's escalating trade war. In a video message posted online, China's foreign minister slams the U.S. for what he calls economic bullying and urges other countries to stand together against unilateral tariffs. The message warns that bowing to a bully is like drinking poison to quench thirst, saying appeasement only invites more pressure. China ends the statement by saying history has proven that compromise doesn't guarantee peace and asserts that it will defend its interests firmly.
China won't kneel down because we know standing up for ourselves keeps the possibility of cooperation alive, while compromise snuffs it out. China won't back down, so the voices of the weak will be heard, bullying will be stopped, and justice will not disappear from the world.
Americans are growing increasingly skeptical of President Donald Trump's economic policies, just as he hits his 100th day back in office. That's according to a new Reuters poll. The survey shows steady approval at 42%, but a higher 59% of the respondents say that they disapprove of his handling of the rising cost of living. Trump won his comeback bid last November amid criticism of inflation under then-President Joe Biden. But while inflation has cooled slightly, many Americans feel that it hasn't fallen fast enough. His controversial trade and tariff policies are also under fire, with more Americans now questioning their impact on prices and the broader economy. The White House and Amazon moved to ease tensions after reports that the tech giant was considering displaying U.S. tariff costs next to product prices on its site. White House Press Secretary Caroline Leavitt initially described the move as a holistic act, raising concerns that such a display could stir public opposition to the administration's trade strategy.
I will take this since I just got off the phone with the president about Amazon's announcement. This is a hostile and political act by Amazon. Why didn't Amazon do this when the Biden administration hiked inflation to the highest level in 40 years? And I would also add that it's not a surprise because, as Reuters recently wrote, Amazon has partnered with a Chinese propaganda arm. So this is another reason why Americans should buy American.
U.S. President Donald Trump personally called Amazon founder Jeff Bezos following that report and later said that the matter had been resolved.
Great. Jeff Bezos was very nice. He was terrific. He solved the problem very quickly, and he did the right thing, and he's a good guy.
The incident underscores how tensions over global trade and the cost of doing business are playing out, not just in policymaking, but in digital marketplaces. While the administration stands firm on tariffs, the conversation between Trump and Bezos could signal efforts to balance transparency with stability in the world's largest economy. All eyes are on Canadian Prime Minister Mark Carney after his election victory on Monday. Experts say Carney is expected to open negotiations with Trump without making concessions about Canadian sovereignty. This comes as Trump threatens to annex Canada and impose tariffs to which Carney had promised a tough approach.
America wants our land, our resources, our water, our country. Never. But these are not idle threats. President Trump is trying to break us so that America can own us. That will never ever happen.
Let's take another look at our top stories. Finance Secretary Ralph Reto backs off from a proposal to raise capital gains, donors, and estate taxes, saying higher than expected revenues in the first quarter have given the government fiscal breathing room. Reto clarifies that the administration is not pursuing new taxes or additional burdens for Filipinos, citing a robust fiscal position and strong collections so far this year. Instead, the Department of Finance will focus on boosting non-tax revenues to hit collection targets and maintain public services without raising tax pressure on households and businesses. Now, Special Assistant to the President for Investments, Frederick Go, and Trade Secretary Cristina Roque are headed to Washington as the Philippines seeks better trade terms with the United States. The delegation will push for lower tariffs on Philippine exports and look to strengthen economic ties with the U.S. amid heightened global trade uncertainty. Meetings are set with officials from the Office of the U.S. Trade Representative and the Department of Commerce. The Philippines is also open to boosting imports of select U.S. agricultural products, but officials say any trade-offs will be balanced against the interests of the local farming sector. And that's it for Business 360 on this Wednesday morning. Stick around and keep it here on BNC, the Bilyonaryo News Channel.